What's up, guys? Welcome to another video. Today we're going to be talking about support and resistance levels. So as always, I think it's important for you to understand what these levels are, what these concepts mean, and really where they come from, as well as how to identify those levels and how to apply them. A really important takeaway in this video is that these aren't just some technical analysis levels, some kind of magic lines that you draw and that will help you trade, but they have real meaning that comes from the demand and supply that you see in the markets. So we're going to start by going into what they are, what they mean, where they come from, and then we'll move on to actually looking at very practically how to draw them and how to use them. So the software that I'm going to be using throughout this video is TV that you can see here on screen. And this is really the king, I think really the undisputed king of charting software. And it's what I personally use and what is going to be used in the video. So if you're just getting into trading, or even if you're a little more experienced, I would highly recommend that you start with TV and really get familiar with it. It takes quite a while to familiarize yourself with a new trading platform. So start with the best. You have all the indicators you could possibly need here. Most of them are free. I'd say, yeah, the free plan has so much stuff. So really, I always recommend everyone just start with the free plan of this. And then if you do decide that, you're going to take this very seriously and you want all of the bells and whistles, then you can upgrade to their premium plans. And you can see the link in the description that will give you $30 off one of those premium plans. So what do we actually mean by support and resistance? So these are just price levels that give markets a certain structure. So the example that we're going to be looking at here, or one of the examples, is the way Tesla was trading back in 2018. And I've just chosen this because I remember trading it and they had it was quite structured. And so I think it will be a decent example. So these levels can really be seen as a temporary floor and ceiling in the price. So markets do have a tendency to find certain ranges that they then like to fluctuate in. So the support level, which in this case, you can see if you're looking at this range, might have been around here, around the $60 price level that you can see over on this side, or at least for this portion of the chart. So this is the price at which the market has shown a reluctance to fall below. So you can see here, it reaches that price and it's reluctant to go below it, and it bounces back up. Whereas the resistance level is a price that the market is struggling to get above. So in this case, it would be this kind of price, like $75 or so. You keep testing that price, but the market is reluctant to go higher. So these levels by no means a guarantee, but they just give you kind of an indication of the market's past tendencies. So as always in trading, it's really just about the probabilities. And most of you probably already know this, but I always want to remind you that there's no certainty in the markets, and everything, including support and resistance, is just one extra tool in your arsenal that gives you information about the markets and that you can use to stack the odds in your favor. There's no guarantee. It's just one piece of information, an important one, yeah, but not a guarantee, and just one piece of the puzzle. Let's talk about why these levels actually occur, right? What do they mean? I think it's always very important to understand what what these indicators are and why they're significant, and not just to kind of be drawing random lines on a chart. So there's a bunch of reasons, and one of them may seem kind of trivial, but is actually very important, and it is simply the self-fulfilling prophecy. So markets are ultimately driven by people, by traders, by investors, and people have a tendency to kind of think that the markets will keep on doing what they've done in the past. So if we look at this Tesla chart, but you can probably see this in all sorts of charts, and you're trading somewhere along here, you might simply make the assumption that, oh, okay, last time it didn't get above 77, and therefore it probably isn't going to again. And then you would see that the further this continues to happen, the more that reinforces. So by the time you get here and you think, well, okay, 3 times we tested 77 and we couldn't get through, it's probably going to happen again. And that isn't necessarily reflective of the underlying fundamentals of the stock. But remember what I was saying, how people drive the markets. So if you have a lot of people that are relying on this kind of analysis and thinking, okay, looking at a past movement to kind of anticipate what's going to happen in the future, then they will set some orders, whether that be to take their profits or to short sell at this particular price, because they think it's not going to go higher than that. And that order will effectively dictate where the market goes, right? And so it is really a self-fulfilling prophecy. And the same would apply to a support level. If you have a lot of people who think that a certain level is going to act as support, so you can take, many points on this chart, but let's say around here, there might be a lot of people making the assumption, oh, here we fell down to $60. We're probably not going to go any further down. So when we come back to $60 again, I'm going to buy, because that's going to act as a support level. And if there's a lot of people doing that and thinking that way, then demand massively outweighs supply, and that moves the market. So literally people thinking that this is going to be a support level makes it a support level. It's that way around. It's not that it is a support level for some fundamental reason. So another reason that these levels occur is again to do with psychology or the mentality of traders. And you will notice that they often appear at rounder numbers or more important numbers. And in this case, you can see that on a kind of small scale by the fact that this support level here is almost exactly at $60 on the dot. And the reason for that is that people are quite lazy. If they're going to set a buy order for Tesla in this case, they will most likely set it at $60. They're not going to set it at $59.23 or $61.07. So most of them are going to be weighted to here. And this is even truer when you have a really big number or big meaningful number like what might be $100 on this chart. I would expect that to be a resistance level. Or if we take a look at Bitcoin back in 2017, the top was $20,000 on the nose. Why is that? It's not a coincidence. It's psychology. So there's a lot of people that will have made a ton of money and then they start thinking, right, I'm going to take my profits at 20K or things like that, and that kind of thought creates a kind of convergence point at this level in the market. And it's much more likely for it to happen at 20,000, big round number, than it is at 18 or 17. So that's one other reason why these things happen. So another one of the important reasons why support and resistance levels occur is less to do with psychology and more to do with the size and quantity of buyers and sellers. So let's say, for example, that here, when Bitcoin came back down to 3,000 and change dollars, let's say that hypothetically there's a huge Bitcoin whale who decides, right, I'm going to buy $100 million of Bitcoin, or whatever it is, right? Some amount that is going to absorb all of the supply. And they just set their order at $3,000, let's say, just to keep it simple. So what happens is they will have their order sitting there, and they basically create a floor in the market. They create the support level. Because what happens is the price will be drifting down and down and down because there's more supply than there is demand. And then when you reach that $3,000 level, their appetite for buying Bitcoin is so much more than all the people who are left to sell that every single person who sells their Bitcoin, that Bitcoin is immediately snapped up by the whale. And then when there's no one left to sell at that price who's willing to sell at 3,000, you move up to the people who are selling at $3,001, 3,002, and it slowly creeps up, as you can see here. So there can be support levels that are defined by these big players. And this is more the case for support levels, but it could also be the case for resistance levels. It might be the case that a huge player or simply a huge number of people had decided, right, I'm going to sell all my Bitcoin at $20,000. And no matter how many people try and buy it, there is just a colossal amount of supply of sellers sitting at 20,000, and they just continue to trade their Bitcoin. And there's many more willing sellers than there are buyers. And so then the opposite happens. Okay, so now that we've covered the theory a bit and why these levels occur, I think that's really important to be able to use them well. And in general, it's just the right approach to learning anything, but specifically trading. I'm going to go ahead and show you more specifically how to identify these levels and also how to draw them. Very practically, step by step, showing you here. Again, I'm using TV, so if you want to follow along easily, I'd recommend that you use this charting platform too. So the first step is really to zoom out on the chart. And what I mean by this is you should be switching to a weekly time frame. You can do that up here by clicking on the W. And we're looking at this period here. And what this does is it just shows you a longer term view of that particular asset. And the reason this is important is that it's just more meaningful information. If you zoom way in to what's happening on the minute or the second or even the hour, it tells you very little. But when you look at the daily chart or the weekly chart, it gives you much more real information. So I would start by looking at the weekly chart, and you can draw kind of the highest level support and resistance lines. And then later we'll move down to the daily chart. So the first thing you want to be doing is looking for very meaningful, kind of obvious standout highs and lows. And ideally also points that the price has already bounced off from a few times. So let's imagine that we're trading Tesla around here, and we're kind of really focusing on this kind of area. So if you're looking at a resistance level, you can see that this is the all-time high, and it has been kind of retested here as well. So what you're going to do is you're going to take this icon here, switch it to horizontal line, and then just draw a line that tries to capture both of these points. So let's say something like that. And you're going to keep it red. I would usually just recommend red for resistance, green for support. And so that's our kind of highest level resistance point. Then when it comes to support, you can see that there was a bounce off here and here. So this was an interesting level for a while, but then it kind of got breached here and then tested again here. This level is the same as this and this. So there's clearly something interesting going on here, but then it also did get violated. But the interesting thing to notice here is that the move was pretty rapid and violent. And what this tells you is that when the price was down here, a lot of people saw it as a bargain. And so the shares got immediately snapped up. So to me, this kind of tells me that this level is the most important level, but there's also something going on here as well. So there's a few things you can do. One is I would just draw this level in because it seems to be important, and you can switch it to a green. And then the other thing you can do is if there's something like this going on, which is kind of, ruining your chart a little bit, but you still want to take it into account, is you can add it as a rectangle. And basically what you're doing here is you're drawing, as opposed to a support line, you're drawing a support area. So you're kind of saying, okay, this isn't a range within which if we drop into here, touch the top or come into it, I should expect a bounce. To gain further evidence of the fact that a level is important, you want to see that quick bounce. And you want to see repeated tests of that level. It's kind of a fine line though, because you don't want to see it being tested too much, because that then tells you that the shares aren't being snapped up at that price. So if we move on a little bit here, you can see that here it was kind of hanging around here for quite a while. It did then bounce back up, but I would have started to wonder here, are we going to drift back down into this area and potentially below it? And actually, so this is a good example, right? You see how every time we hit the resistance level here, we go straight back down off it. And here we hit that level and then we turned around and hit it quite quickly again. So that tells you that the market forces are kind of pushing towards the high, and they might be able to break through the ceiling, and that's why we would then call it a breakout. But that's a different topic. And you can see once you manage to break that level, that resistance level, then the stock is kind of less constrained and will often ride higher. So once you've done this on the weekly chart, you can move down to the daily chart and get a more nuanced view of what's been happening. And this will kind of take you away from the bigger picture, but it will also show you more detail, which sometimes can reveal some interesting insights. So this allows you to move around a little bit and have a clearer view of what's been happening. So this area that we were saying looked a little bit suspect. You can see actually it was 2 taps, but they were quite quick. And on a daily level, it did actually bounce off quite quickly. So, I mean, here I'm not seeing anything that is kind of jumping out at me. Maybe it's a little more obvious that this kind of price level is meaningful. You can see it was a high here and then again sort of here and here. So this price level that it looked like it was this level on the weekly chart, maybe we can draw it as a bit more of a rectangle, or if you prefer, you can also do another line. So let's say around here, and you can fill this in as well with a rectangle if you'd like, and you just get a clearer picture that this is actually an area of resistance. And so then you can start to have kind of multi-step approaches, whereby you might think, okay, this is going to be the first test of resistance. It should bounce off here. And then kind of think that, okay, it should really bounce off here. And so you kind of have a staged information. So you have different stages and importance to the information that you're seeing unfolding in the markets. And it really depends on what instrument you are trading and what kind of trading style you have. But personally, I wouldn't really recommend diving any deeper than the 4-hour chart. I think I found it to be much better to stick to daily and weekly. If you zoom in much further than that, then you just kind of get lost in the day-to-day or hour-by-hour noise, which isn't really that meaningful. So I wouldn't recommend it. If you're more advanced and you focus on shorter time frame moves, you want to focus on scalping or day trading, things like that, then maybe you can focus on the shorter time frames. But just bear in mind that those levels are going to be less meaningful and less reliable as well. So you might be wondering how you can actually make use of these levels in terms of trading. And as I said at the beginning of the video, it's one element that will help you decide how you're going to trade a market. But the kind of 101 beginner trade here would be simply longing support and shorting or taking profits at resistance. So if you had been analyzing this chart and you had drawn these levels in this initial stage, then you might have been tempted to look at this level and think, okay, this could be support. Maybe we're going to bounce off here. And therefore you buy some Tesla shares here. And then to take your profits around this level. Simple as that. Or you might decide to short Tesla here or here and take profits down here or down here. And the key here isn't about being right or knowing what the market is going to do. It's more about improving your risk reward. And this is the concept that I'll be making more videos about, and that is really key in trading. So the important thing about this level, or the levels in general, support and resistance, isn't so much the level in itself. There's nothing magic about $35 or $36. The key thing is that you are able to define your risk. And what I mean by that is, let's say that you're deciding to short Tesla here. Well, you know that this is a strong level of resistance. So you can cap your risk by setting a stop loss just somewhere up here, with the idea being that if it reaches that price, then your resistance has been breached and therefore your trade is not valid and you want to cut your losses. But you only need to risk a very little bit and you can actually gain much more. So in this case, let's say that you manage to short Tesla around here. You could put your stop loss at 60. So you're risking from 56 to 60. You're risking about $4 per share. But you know that your profit could be all the way from 56 down to 36 or so. So $30. So that's a very appealing risk reward. If you're not too sure about stop losses, what they are, how to use them, I made a very in-depth video about that, which you can go and check out on my channel. And last but not least, guys, if you are getting into trading and you want to take this seriously, you can join my Patreon. Link is in the description. And that will give you access to the private Discord where you will have live real-time alerts from me on crypto, stocks, literally everything that I'm trading. You have access to the chat channels, and you will also have access to our Notion page where you have all of my platforms and tools, advice, principles, live classes where I'll be teaching things, and you will attend live, be able to ask questions, etc. You will receive my market update videos as soon as I produce them. And basically you receive everything. If you like my approach to trading and my teaching, then yeah, I would highly recommend checking it out. So take care, and I'll see you in the next video.